All right, so we're about to dive into this week's market snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes. Here we go. All right, so we've been letting you guys know that we've seen a window opening up for buyers, where we've seen buyer activity kind of decreasing and inventory kind of increasing over the past several weeks, maybe even a month and a half or so. As you have probably heard, if you've been watching anything to do with real estate, they are expecting the Feds to lower the interest rates in September, and as a result of that, we've seen the interest rates already start coming down this past couple weeks. So we are starting to see buyer activity tick up, and we're actually starting to see inventory come down a little bit. So that buyer window may or may not be closing. We'll just have to see how this plays out. But let's look at what's happened in the last 7 days. And again, the reason we look at a 7-day window, we are looking at what we call lead measures. So lead measures are things like properties that went under contract this week, properties that were put on the market this week. So we're seeing what the inventory or the supply is doing actively, and we're seeing what the demand or the buyer activity is doing actively. And we look at it over the last 7 days so that we can make a call based on what we need to do in the market as a buyer or a seller. If you use the statistics, the monthly statistics, quite often, if you look back at where those statistics come from, let's think about it like this. If we closed on a house today is August 17th. If we put a contract on a house today, August 17th, we would likely close on this house September 17th, or possibly by the end of September, because usually it's a 30-day close. So we would close in September. Those numbers would not be calculated until probably October 10th to 15th. And then if it's a national number, or if you're looking at national media, they're distributed out. So it's probably going to come out around November 1st. Even the market calculations that we do on our monthly market report wouldn't come out until October 10th. So anything that went under contract today, you wouldn't see those statistics until October 10th. So you can't make decisions based on monthly sold data, because that is at least 45 to 60 days old. You want to have acute lead measure data so that you can guide your day-to-day transactions. So we're going to dive into those numbers right now and show you exactly what's going on. All right, so as you can see with buyer activity, let me get my little line here. Buyer activity, that is our demand. Buyer activity did go down just a little bit, but it was more of a flat line versus inventory took another significant dip. So this gap between supply versus demand increased versus last week. So if we go over here to the strength of the seller's market, you can see that our seller's market increased in intensity over the last 7 days. Now you can notice a trend. We can see from here down to here, we've had decreases in buyer activity, and we've had a slow and steady increase of inventory at the same time. So that has brought the strength of our seller's market in a downward trajectory. And then we hit this bottom out, which is the same time we hit the bottom out last year. And now we're starting to climb back up, and we're going to stabilize somewhere in here, I predict, with the seller's market. So one of the things, so keep in mind right now that it's still a good window for buyers, because we're not seeing 15 to 20 offers on properties. We are seeing showings kind of slow down, especially the next week or two, because school's fixing to start in Fairfax County. So anytime school either gets out or changes, things tend to slow down. So it's a good opportunity for buyers right now. From a seller's perspective, it's still a seller's market, so you're still, getting, as long as you're pricing the house appropriately, you're still getting that sales price and getting top market value. One of the fears that we hear quite often, and I may have these statistics a little bit off here, but one of these fears that we're hearing right now is that things slow down during the elections. And that is true. Things do tend to slow down during the elections. And I heard some statistics recently, and I need to go back and get these actual numbers, but I want to give you a rough summary. It was something like 11 of the last 13 elections, the interest rates have come down prior to the election, which we're seeing that here. So keep in mind, this elections every 4 years. So we're talking in the last 44 years to 52 years, 11 or 44 of those years when the elections have happened, the interest rates have come down. We're seeing that happen. Also, market activity tends to come down. And I think it was like the same time frame, 11 of the last 13 elections, market activity came down a little bit because there's a little bit of uncertainty who's going to be the president. It really doesn't matter who wins. The change that I'm about to mention does happen either way. But in those situations, the following year, I think it was 10 of the last 11 years, the following year, the market was stronger than it was the previous year. And then also in 8 of the 9 last elections, the prices continued to go up went up in the following year. The only year it did not go up and the only year there was not more activity was 2008, and that was when we had the housing crisis. So what does this mean? It means that if this year follows the same pattern, it means interest rates could come down, buyer activity could decrease a little bit, and then after the election, the interest rates being down, buyer activity is going to pick up, market prices are going to pick up, and everything's going to happen. So what does that mean for you as a buyer? That means that right now is a good window because you can get the lower interest rates without the escalation of what happens after the election. So it's a good window for buyers right now. So you really need to, it's not a buyer's market, it's still a seller's market. Sellers are still in control, but it's not as strong of a seller's market as it has been. All right, if you have any questions, please feel free to reach out to us. We will be back next week with the market report so we can see if this trend is continuing and see exactly what's going on. All right, talk to you soon. Okay, so here we are. We're going to dive into this month's market report for the month of July 2024 versus July of 2023. The reason, as you know, we do our weekly market report is because those are lead measures. They let us know acutely what's going on in the market so we can make minute-to-minute decisions. Our monthly market report gives us a bird's eye view so we can see where the trends are going and what's happening. Are we expecting prices? Are we seeing prices moving in a certain direction? What exactly is going on? So we need that focused information so that we can figure out exactly what to do in the moment. But we need the broad span, the bird's eye view, so we can get a picture of what's actually happening in the market, so that we can tell what trends may happen, so we can strategize appropriately. All right, so we're going to dive into the 2024 numbers. Okay, so here is our weekly market report. If you missed it, go back and watch the August 18th market report, and that'll market snapshot. That'll give you the details of what's going on in the last 7 days. Okay, so let's start with new listings. As of July of 2024, it was the same as July of 2023. We had 1,209 new listings in Fairfax County in July of 2024, exact same in 2023. So the inventory pretty much stayed flat. We are hearing that there's a lot of increased inventory out there, and we are seeing that inventory in general is up, but the number of new listings for July specifically were the same. So that number was flat. Okay, so that's the number of new listings. So now we're going to jump into the number of new sales. So for July of 2023, we had 1,091 sales versus 1,209 listings. For July 2024, we had 1,237 sales for the same number of listings. So basically, we were up 12% in July of 2024 versus July of 2023 in number of sales in Fairfax County, meaning that the buyer demand was higher. That's why we're still seeing a seller's market. Days on market. So days on market indicates how long it takes for a property to sell once it hits the market. So in July 2023, 16 days, July 2024, 16 days. So same, it's flat. How about months of inventory? So the months of inventory, what you do is you take the total number of active listings and you divide it by the total number of properties that sold. That gives us what's called the absorption rate. The absorption rate tells us, is this a seller's market? Is it a buyer's market? Is it a strong, neutral, healthy market? Opinions vary on the number of months that each put you into each category, but in general, we can say anywhere from 5 to 6 months is a good, healthy market. Anything below that 5 to 6 month rate is a seller's market. Anything above that would be a buyer's market, because that's mean we have inventory that would last more than 6 days. And I think I forgot to say this part. So if the continuation of the sales rate happened, but there was no new properties that hit the market, then that tells us how much inventory we would have before we ran out of inventory. So in July of 2023, we had 3 months of inventory. In July 2024, we had 2 months. You can actually see that our months of inventory is lower this year that are for the last 3 months than it was for the same 3 months last year. So we're still in a strong seller's market here. Inventory is still a challenge. Even though we're seeing increases in inventory, that buyer demand is going up with it. Median sales price. So the median sales price for July of 2024 was $733,000. The median sales price of July of 2023 was $702,000. So we've seen a 4.3% increase in Fairfax County of the median sales price. Since 2022, we've seen a 12.6% increase. And the reason these numbers are important is because if you are one of those people that's sitting on the fence waiting for the next market crash to happen, number one, we're not seeing the numbers that are showing that a market crash will happen. We are feeling a little bit of a slowing in the market, but we're not seeing anything that indicates that prices are going to come down. We can say that maybe prices might flatten a little bit, or the appreciation might flatten over the next period of time. But we can also say with the same amount of confidence, based on these numbers and based on the fact that interest rates are starting to come down, that we could see these numbers climbing again. And the point of this is, we've grown in Fairfax County specifically 12.6% over the last 2 years. If you're waiting for the market to crash, even if the market does change, and even if the market moves, let's say 5% downward or 8% downward, you're still net negative because you've been waiting for this to happen. If you go all the way back to 2020, it's ridiculous how high it's gone. So the point on that is, if you're considering getting in the market and trying to time the market, it's very, very difficult to time the market. The best strategy is it's time in the market, not timing the market. So again, prices seem to be going up. Now, I do want to give some clarification of what median sales price means. I do this every month, and it's important to understand so that you understand how statistics work. So the median sales price is the number that's the number when they take all the houses that sold. It's the number that falls right in the middle. And they use this number because it keeps the data from being skewed by a really high sale. Like if you used average sales price, if you had a bunch of really high sales or really low sales, it could skew the data. So they use the middle number of the houses that sold. So let's see how that affects the market. So if you went to month one, you can see we had anywhere from $3 million to $220,000 in sales. We only sold 10 properties here. The one that fell right in the middle was $500,000. So the median sales price for month one was $500,000. Month two, we had 4.2 million. All of these sales were higher than this one, and all of these sales were higher than these sales. But the middle one, the one that fell in the middle, was only $400,000. So in this example, month two, there's a 20% drop in the median sales price because the first one, it was 500,000, second one's 400,000. So we had a 20% sales price decline. So if this was being reported in the media, and this is an extreme example, but if this was being reported in the media, then it would be reported that the market is crashing, house prices are falling by 20%, which gives you the impression that now, today, you could go out and buy that $500,000 house for $400,000. The fact of the matter is, you cannot. In fact, all these other houses were costing more. It's just where that house fell. So median sales price does not necessarily tell us the value of a home. You have to do specific analysis on each individual home to see, are the values of those homes coming down versus others. This can be location, geographically specific. It can be even within a special geographic area, for example, Northern Virginia. It could be city specific, Alexandria versus, let's say, Reston versus Mclean. It could be neighborhood specific. If you're in a specific neighborhood in Mclean or a specific neighborhood in Reston, it could be specific there. So you have to look at each individual property to see what the supply and demand ratio is doing, to see what those homes are doing. For example, it could be a really strong market all over the place, but there's a specific neighborhood where there are 6 houses that are the exact same, that are on the market at the exact same time. They may start cutting prices to compete, and that market value may drop in that neighborhood, but the surrounding neighborhoods are still going up. So it's very specific, okay? Just want to get that clear. All right, but overall, median house prices have gone up by 4.3% in the last year per the month of July. All right. The list to sales price ratio. So this is, how much over or under the sales price on average were people paying. So for July of 2023, they were paying around 101% of sales price. July of 2024, they were paying almost 108% of sales price. So prices are still going up, even though the demand is feels a little bit low, felt a little bit lower in July, prices are still going up. And then this is a graph that I go over each month. It just shows how interest rates and recessions don't really affect what the home prices do. It can affect the demand, but it won't necessarily affect the home prices. So you can see these are the home prices, and they've continued a pretty steady escalation up until we got to 2008, and then it took a pretty good dip and took a while to recover. Outside of that, house prices have either pretty much been flat or consistent. And there's another graph that we have that I need to put on here that's shown that I think it's been 7 years out of the last 77 where house prices have actually dropped overall for the year, and a lot of those years was like 1%. So only 10% of the years have prices come down, and even during those years, it's been a very minuscule amount, except for 2008 when the housing crash happened. Okay, so the market is feeling slower. We are seeing fewer showings, but we're still seeing high demand. We're still seeing competition in the marketplace. It is a window right now for buyers. If you look on the minutia, looking in close right now, there is a window right now for buyers to get into properties without as much competition. But it is still a seller's market. So sellers, when you're putting your property on the market, you have to price it appropriately. If you do so, and it's a price for its condition, you will get your top market dollar and possibly even more, because there is the demand out there to get it. All right, if you have any questions, please feel free to let us know, and we will dive into the monthly market report, probably mid-September for August, so we can look at those numbers. All right, everybody have a great day.